As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stock Sniper Trading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Welcome to Stock Sniper Trading. In today's tutorial, we will be going over the bearish downtrend, which is illustrated by lower highs and lower lows. A trend line is a diagonal line which touches 3 or more price pivot points on a chart by the body or wicks of the candlesticks. This line is a visual representation and can be used on any time frame to establish the support and resistance. Technical analysts use trend lines to determine the current direction of the securities price. Furthermore, they believe the trend is your friend and can be illustrated by an uptrend or a downtrend. An upward trend line on a chart shows buying pressure, whereas the downward trend line shows selling pressure. This gives traders an indication of the current trend, and once the trend is broken, a reversal in the market is established and the new trend is formed. In this particular example, we can see price dropping, and it is illustrated by making lower lows and lower highs. As price continues to drop, it further determines the selling pressure and the downtrend, and price continues to fall as long as we continue to make lower lows and lower highs. This downtrend comes into question when we start to make higher lows and higher highs. The bearish downtrend. It is bearish selling momentum, and the downtrend forms lower highs and lower lows, and it has parallel trend lines. And we can see on the left, as each price comes down, we make a new lower low, and price goes up where we have some buying momentum. However, it does make a lower high from the previous high. As sellers continue to enter the market and push the price down, we make a new lower low, breaking the previous low. And we have buying momentum continue, but as this buying momentum continues, we have more sellers coming into the market, continuing to push prices down. And you can see the pattern continues to make lower highs and lower lows, and the price continues to drop. A downtrend on a chart shows that the security's overall direction is in a downward price movement. As the security continues its downward trajectory, each successive peak is lower than the earlier ones established. For example, traders use the terms such as lower highs and lower lows referring to a downtrend. As long as the price of the security is making these lower swing prices, the downtrend is still in place and will continue until these lows are no longer relevant. A downtrend comes into question when it starts making higher highs and higher lows, and the downtrend may be coming to an end, establishing a reversal uptrend. This is an example of a bearish downtrend making lower highs and lower lows on our TradingView chart. And in this particular example, we are looking at the USD JPY pair, and we are on the 5-minute time frame where each individual candlestick is 5 minutes. And we can see we have a bullish uptrend where the US dollar is stronger than the Japanese yen. As price continues to come and make a bullish momentum, it will eventually reach a level of resistance, B. The resistance level is 103.844, where we start to encounter some selling pressure as sellers push the price down. Our next candle is a bearish engulfing candle, and we make a lower high on this candle and a lower low, breaking the previous support, bullish support we had. This now is establishing a downtrend, and our next successive candles continue to make lower highs and lower lows. C, we make lower highs and continuing our downtrend, and it is LH, and we go to D, which continues to make lower lows, confirming our downtrend. And as price action continues to obey and respect these lower highs and lower lows, you can see that the price continues to go bearish, and more selling pressure comes into the market as selling volume increases. D, we have the bearish continuation, and we have price action continuing to fall as long as we continue to break previous bullish support levels and price action continues to make these lower lows and lower highs. This is an example of how it looks. So here is our bullish uptrend of the US dollar Japanese yen going up to reaching a level of resistance. So we reach our level of resistance here with this bullish candle, and now we're going to see if it starts getting rejected with some selling pressure. So we can see now the wick of that candle, the upper wick, shows rejection and shows selling pressure increasing. Now we need to see if these candles can break the previous support levels to make lower lows. So the next bearish candle broke through the previous support level, making a new lower low, and the top of the candle is making a lower high from the previous green wick that we had. As long as this selling pressure continues and we continue to make lower lows and lower highs, then the price will continue to drop and the downtrend is established. So you can see here, these next few candles are continuing to make lower highs from our previous candles where this whole momentum started, and at the bottom of the candles, as long as we continue to make lower lows, price action will continue to decrease, and we can see price action continuing to go bearish as selling pressure increases. Quick recap: the bearish downtrend. This consists of bearish selling momentum as selling volume increases and more sellers come into the market and they outweigh the buyers. A downtrend forms lower highs and lower lows, and it is parallel trend lines going down. And this is of importance because if you get into a sell situation, you can continue with a trailing stop loss as long as the overall bearish trend continues to make lower lows and lower highs, and you can place your trailing stop loss at each lower high and continue to go down as long as the selling pressure increases. We hope you enjoyed this tutorial on the bearish downtrend, and on our next tutorial we will be introducing continuation chart patterns.